Pokt network, or the POKT token, is on a massive rally. It's outperforming everything else. The question is why? How sustainable is this rally? Who is actually buying here? Who's selling here? Let's have a look at the on-chain data, the data most people are not considering. Now, in the last month, the token made more than a 5x, so an increase of 462%. We had a centralized exchange listing on the 30th of May, a subsequent retracement, and now we are coming back up. We are interested in the demand and supply dynamics, not necessarily in the data that's easily accessible to everybody else, but the fundamentals are that this is an infrastructure play. It tries to move data from off-chain to on-chain, to a similar degree to how Chainlink does this. Now, the token has versions on various chains, but real adoption only happened on the base chain and on Solana. So let's have a look at that. Here's the version on base. We've got in total 8,527 wallets that hold the token. Here we've got the version on Solana. We've got 4,899 wallets that hold the token. Now, the raw number of holders doesn't really help much because this number can be manipulated, say with airdrops or with trading bots. What we're really interested in is how many people have some kind of significant capital in the token. And that's why I like to look at this statistic. On the left side, we see the number of wallets that have at least 15,000 POKT tokens. So at the current price, that's a bit over $1,000. On the base chain, we've got 112 such wallets now. In the middle, we go at 10x in minimum holding. So that's now more than $10,000. There's only 40 such wallets. On the right, another 10x. So that's now $100,000 worth of the token. There are only 8 such wallets. So that's now on base. Here we've got the same statistics on Solana. Again, we tend to see accumulation across all wallet cohorts. It's not incredibly quick accumulation, as in from beginning of the year to today, this grew maybe by 20% or so, but it's better than seeing a flat or a declining line. Now, we don't just have on-chain trading. The on-chain trading is nice because we can have a look at the data directly. We can see the transactions on the chain. We don't see that for the centralized exchanges, but for Pokt network, most trading actually does happen in those black boxes. Now, there was more than 19 million of trading volume on the token on Bithumb. That's 75% of all of trading volume. The largest decentralized exchange is Aerodrome, so that's now the base chain. There was only 1% of trading volume over there. Orca is the equivalent on the Solana chain, only 0.2% of trading volume. So really, the price discovery happens on the centralized exchanges. Now, there's also bets on the price. That's the perpetual futures. It's not necessarily where price discovery happens because there's only 6.4 million worth of trading volume, but it's still interesting to look at the data in more detail. There's no clear correlation between the open interest on the perpetual futures and the spot price. Again, the price gets discovered on the spot market, not on the perps. For larger assets with more leverage, we tend to see the green line and the yellow line move in similar directions, but not so for Pokt network. At the beginning, we saw a lot of liquidation, so this is when perpetual futures trading launched. Now we mainly see shorts getting liquidated. Now, why is that? It's because most people bet on falling prices massively. So the shorts have to pay the longs, and they're willing to pay around 100% APY just to bet on falling prices. So the active traders on the perps are incredibly bearish on Pokt network. They think that the price will decline rather sooner than later. Now, the tokenomics are very intransparent. The project raised $10 million, but that's back in January of 2022. And maybe those investors have already cashed out because the token performed incredibly poorly, and that can be due to early investors selling their token on the open market. But again, this was at the beginning. If you look at the logarithmic long-term chart, we now see our rally. There's a lot of tokens in the DAO treasury and for liquidity provision, 17% for the team, 23% for the founders. And so it's no surprise that Pokt network underperformed Ethereum long term. Now, I find this chart fascinating because we tend to see the rallies very quickly, then a retracement, then a secondary rally, and then the price deflates again. This is a very typical pattern of price manipulation. So a run up, a retracement, another run up, and then the final deflation. Now we've got a first run up, the deflation, potentially a secondary run up, and then we might go back down. We actually see this very regularly. Have a look at Dogecoin relative to Ethereum. We had a pump over here, a retracement, a secondary pump, and then the final deflation. Or over here, again, a pump, deflation, secondary pump, and then we went down. This is very typical. Another rally here, a retracement, and a secondary rally. And then it finally comes down. Whether or not the secondary rally succeeds the first one is up to speculation. It depends on how many people bet on falling prices. Because this is how those movements to the upside actually happen in the first place. If enough people bet on falling prices, then it can be very profitable for the market makers to induce short squeezes. So to buy up a lot of the supply on the spot market in order to force liquidate the shorts that then pushes up the price even further. Once all the shorts have been liquidated, then the market makers sell as well. And you might just see exactly that now playing out for Pokt Network. We had our first short squeeze, a retracement, and let's see where the secondary rally goes. But I do believe at some point we will start the deflation, and then it might make sense to bet on falling prices. I think now it's still too early because still the majority of perp traders are betting on falling prices. Most people are not yet liquidated. But once we are a bit more balanced in the funding rates again, and once we start declining, it actually might make sense to bet on falling prices as well. Right now, I stay away. I'm surely not buying into the rally because at some point I do expect this to go further down again, but I'm also not yet betting on falling prices. I want the whole thing to first calm down and get some clarity. Now, what is the likelihood of outperforming Bitcoin by buying an altcoin and holding it for 1 year? So let's say we are in a bull market. Let's say Bitcoin went up. How likely is it, let's say we pick an altcoin in the top 100, that we're actually going to do better than just buying Bitcoin? We would expect that likelihood to be above 50%, right? Because when the market as a whole is going up, the altcoins are smaller, right? They should be more volatile. They should go up even further. So probably more than half of the altcoins should go up when Bitcoin went up as well. But here's something you don't see other crypto YouTubers talk about. What we've got over here is the top 100 altcoins in terms of market cap. And over here, we've got Bitcoin. And we can count the number of altcoins in the top 100 that did better. It's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18. There were 18 altcoins that did better than Bitcoin, then there's Bitcoin itself, and there's 81 altcoins that did worse. So during a time when Bitcoin went up by more than 50%, more than 80% of the altcoins did worse. So again, here are the better performers, here is Bitcoin, and here are all the altcoins that did worse than BTC. Now let's have a look at the altcoins that are smaller. So not in the top 100, but from 101 to 200 in terms of market cap. How many altcoins performed better than 51.8%? We've got 1, 2, 3, 4, 5, 6, 7. 7 out of 100 altcoins in that lower tier performed better than Bitcoin. 93 did worse. Let's go another tier down. So this is now the altcoins from 200 to 300. There were 1, 2, 3, 4, 5, 6, 7, 8 altcoins that did better than Bitcoin and 92 that did worse than BTC. In other words, just because the market is going up doesn't mean that the altcoins are outperforming Bitcoin. Most of the time, even during a bull market, the vast majority of altcoins is doing worse, and there's a good reason for this. The first reason is interest by retail. There are fewer and fewer retail investors speculating on crypto, and there's more and more money flowing from Wall Street into crypto. Now, Wall Street doesn't buy the altcoin that is place number 400 in terms of market cap. Wall Street buys Bitcoin and Ethereum. The time to speculate with altcoins is when a lot of new people enter the space, when the number of search queries is going up. Have a look at the social metrics. This is the altcoin daily channel. The number of views is close to all-time lows. Here's the number of newly gained subscribers on Crypto Banter. Here's the number of views on Coin Bureau. And so the riskier parts of the market tend to shrink. For example, there's the pump.fun ecosystem, right? The launchpad of meme coins on Solana. The fraction of trading that happens through pump.fun tended to decline. We had our initial expansion, but since November of last year, less and less of trading on the Solana chain is pump.fun related. The Bitcoin dominance continues to go up and historically it only went down when it was close to 70%, potentially even higher, 72, 73%. When Bitcoin dominance is going down, that means the altcoins are outperforming. But this is not happening since September of 2022. It's the Wall Street money that currently supports crypto prices, and mainly Bitcoin and Ethereum. The fundamental reason why altcoins tend to do worse than Bitcoin and Ethereum most of the times is tokenomics. It's unlocks of supply, it's the early investors getting paid out, it's the team getting paid out, and it's the demand for the altcoin not growing to the same proportion. Have a look at this here. This is IMX or Immutable X. It had massive increasing supply over time. And so there's no surprise that IMX underperformed Ethereum by 86%. Now this is a logarithmic chart. Here's the same thing on a linear chart. Now have a look at this. This is SEI network. It went from 1.8 billion SEI to currently 4.3 billion. So the supply 2.5x'd. And of course the demand doesn't grow as quickly. And then we see an 80% underperformance. That's then a very common development. Or over here, we've got Arbitrum. It went from 1.3 billion tokens to currently 4.3, so more than a 3x in supply. And again, Arbitrum relative to Ethereum underperformed by 85%. And those kind of charts are not cherry-picked, right? Again, the vast majority of altcoins underperforms Bitcoin and Ethereum most of the time, even during a bull market. And that's because of the token inflation. All of the insiders and early investors, the VCs, they make money when this is going down. But we can also make money when this is going down. We do not have to be a venture capitalist or an insider or a Web3 developer in a crypto team. Instead, we can make money from those relative valuations by using decentralized finance or by using perpetual futures on decentralized finance perp exchanges. What you're seeing over here are tutorial videos of the premium membership. So the link is down below. It's thebitcoinstrategy.com. And so I like this strategy a lot during this current market environment. If retail interest suddenly spikes up again, right? If the social metrics go up, if the views on YouTube go up, I will notice this very quickly. And then it might make sense to buy the small altcoins again. Currently, we are not in that market. Why not take advantage of Bitcoin dominance continuing to climb while all of those insiders make money with the token inflation and while all of those tokens tend to do worse? We don't have to find the needle in the haystack. We don't have to find the next Giga token or the next Oxycoin or the next Cheems. We can just bet on all of those other tokens doing worse. We can basically flip this chart. So instead of losing 90% of the time, we can win 90% of the time. It sounds unrealistic, but it's really true, right? Just flip this chart. If you bet on falling prices during times like this, you're making money. And of course, I'm also sharing my own trades. So here's one from April 30th. Of course, I'm not sharing the most recent trades, but here is a trade where I shorted the Trump token. So that was the chart at the time. And then afterwards, surprise, surprise, it tend to go down because the Trump tokenomics are very bad as well. The supply increases very consistently. Well, have a look at this. This is WorldCoin that I shorted on May 23rd over here with this chart. Again, I'm sharing this directly in premium in a dedicated channel, the Gerhard's Trade channel. So this chart turned into this chart. We are close to all-time lows. This WorldCoin trade specifically was very nice for the community. Just have a look at all of those copy trades. If you have proper risk management in place, you can make very nice percentage returns as well. I started with this strategy on the Hyperliquid platform 2 months ago. We are now at 9K unrealized P&L and we are betting on relative valuations. So we go long Ethereum and we go short many altcoins. And again, we can have the odds in our favor. This is also psychologically much easier than trying to find the next 10x token. First of all, it's very hard to make a 10x in this market, but also when you're trying to get that much into risk, then it's impossible to not have losing trades. So there will be a lot of losing trades to then have hopefully one trade that makes up for all of the losses. But the issue is with such a strategy, we can't deploy a lot of our capital in a single bet. We've got all of that volatility with that strategy, so we can only bet a few hundred, a few $1,000s. But once we've got a strategy that outperforms more consistently, we can dare to deploy more capital as well. We are not hoping for the big breakthrough. Instead, we are constantly growing our capital. And we do this relatively quickly if we use leverage in the right way. Again, we don't want to over-lever. Of course, we don't want to get broke. But if we hedge ourselves against the general macro environment, the volatility isn't actually that big. So if you're considering to revamp your strategy, if you potentially made gains first and then lost it all, then maybe it makes sense to learn about these things. There is the premium membership. It's currently $125 per month. You will lock in that rate. So once the bull market comes back, I will increase the price back to $165. But if you're now subscribing, you get the $125 and you will not be affected by the future price increase. If the size of your portfolio justifies also to invest in a one-on-one call, then feel free to sign up for the yearly, not for the monthly subscription. You also get a discount of $250 per year. But again, there is the 1 hour Zoom call where you can ask me anything and where you can have a look at your assets, not just at crypto, but at asset classes in general. Now you should see a link to Premium directly appearing here on the screen. When you click on that, you will land on the sign up page. If it's your first time over here, feel free to subscribe. I publish these regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in Premium. Cheers.